So welcome back. We are continuing with the question of August 2023, question number 24. We are continuing with that question, as you can see on the screen. So before we ended the first session, we had come to the point of salaries. So we go now to the information number next, that is saying, in addition, the audit fees are estimated at 1.2. So these audit fees, they are not included anywhere in this list. So what we do, we have to come here and put the audit fee accrued. So audit fee accrued, and this one will go to as an expense and as a liability. So to income statement, then we have the audit fee accrued to statement of financial position. Statement of financial position. So, because we are saying it is an expense, this one, when I come to my column of adjustments, it is supposed to appear as a debit. So I come here, 1,200. And then it appears as a credit here as a liability. So I put it there. And then it will come to my income statement here. It will come to my income statement, this one, as an expense. And then it will come to my statement of financial position as a liability, this one. Yeah, as a liability. The next thing is, what else are we told after that? We are told that the loan stock interest paid is for half the year. So this loan interest that is paid, let's look for it. The loan interest, this one, you can see it is some 400. And when we are told it is for half a year, that means the full year should be 800. So there is an accrual. So I will come here and talk of loan stock accrued. Loan stock accrued. And because it is an accrual, this becomes a liability. So this becomes a liability. So let me look for my column of adjustments, BOE. Then, because it's a liability, it should be on the credit side. Here, 400. And being a liability, it will end up in my statement of financial position here as a liability, that way. And then it is also going to appear as an expense because we have incurred, it's only that we have not paid. So I will come to my loan interest paid here, my loan interest that has been paid. So when I come to my loan interest that has been paid, this one, I will need to debit. So I'm supposed to show this one is coming from here. Yeah, that way. And then because it is an expense, that should come to my income statement, I can finish with it here. And I say here, this will be equal to the one that was already paid plus the accrual here. We put it there. We put it there. Okay, the next item that has been mentioned is general expenses include prepaid amounts. Prepaid amounts. So what we have been given here is just general expenses. We have some general expenses, these ones. So we have to create general expenses, prepaid account, general expenses, prepaid, and that one, prepayment is always an asset. Prepayment is always an asset. So I'll come here and debit it, 350. And because it's an asset, I will also bring it here in the statement of financial position equals that one there. Equals that one there. Okay. Then what does that have to do with the general expenses that I have? It has the impact of reducing them. So I will come here where I had general expenses. They are here. So I will need to credit. So the credit should be here in the adjustments. And I'm crediting, so I'll say equals, I'm crediting with this amount that I brought there. So when I credit, this one is an expense. This one is an expense. So it should appear in my debit of the income statement. And it's going to be equal to what we had here, this one, you minus this one, because this one we have not yet incurred. So that is what we are going to record there. Good. The next one is depreciation is charged for the motor vehicles 30% on reducing balance. For the motor vehicles on reducing balance. So I can come down here, maybe somewhere here, I can have a working for depreciation. Computation. For depreciation. So because I'm told it is on reducing balance for the motor vehicles. So if I come here and I start with motor vehicles, I have the initial costs. Then obviously I will have the accumulated depreciation. Then I'll have net book value. Then I'll have rate of depreciation. Although it's not a must you record this way. Current depreciation. Some of these figures will just pick them. So this one I can make it bold, even this one, make it bold. So I want to see the initial cost of the motor vehicles, BOE. So I will come here and say this is equals to this value here. So you pick, you enter there. Then I want to see the value of the accumulated depreciation. So for the motor vehicles, the accumulated depreciation BOE. So I enter. Then my net book value should be the initial cost minus the accumulated. Now here, the rate of discount is 30%. So this one I can pick, or I can just write 0.3. Now this one I'll have to increase the decimals, and then I make it a percent that way. rate of or the current depreciation now should be equal to this amount times this. Yeah, so that is the depreciation amount that I have. I can make this one bold. As a result. So how do we treat this amount, this depreciation? So this depreciation, what the examiner has given us here is just the accumulated. So we need to get the depreciation expense. So, and you can see they have not given us depreciation expenses. So we can come here and say depreciation expense. So I have the motor vehicles. I have the motor vehicle. So because this is an expense, I need to debit it and credit the accumulated. So let me start with for the adjustment here. Adjustment niko nazo hapa kwa E. So when I come here, I will have to debit that amount, and this is equal to, you show the examiner you got it from there. So akigonga hapa, they can see how you arrived at it. And this one, it is supposed to come to my P&L. It's supposed to come to my P&L on the debit side. G here is supposed to come here. This one there. Supposed to get there. Then it is also supposed to affect, my accumulated depreciation. My accumulated depreciation should increase. So I go to where I have my accumulated depreciation. And in the accumulated depreciation, I will credit it. So I think this is my credit for adjustments. So accumulated depreciation for the vehicles is this one. So I will credit that. So I'll say equals to this amount here. Yeah. And then that amount, I know how it is going to affect me at the end. It will come here to the statement of financial position on the credit side. On the credit side. On the credit side. So on the credit side, it will be equals to this amount here, the original, plus what we have added here. Yeah. This column appears so big. It's okay. So it will appear there. So let's go and do the same thing with furniture. So furniture, when you are told a straight line, we will have that was motor vehicles. So I can have the furniture here. So initial costs. rate of depreciation, rate of depreciation and depreciation or current depreciation. For this year. So I can bring it here. This one should be equal to, I go to my furniture. The cost is this one. And because we are told the rate is 10%, put it there. And I put it in percent that way. Then this one should be equal to this times this. Yeah. So again, this is going to affect my accumulated depreciation and my income statement. So let me start with the income here. So furniture. And this amount, I put it on the wrong line. So what I'll do, let me insert another line here instead of changing. So that this one, I call it motor vehicle. Motor vehicle. And then here I call it depreciation expense. Now this one is furniture. We need to be very careful because there are very many rows. So now I am supposed to bring this one here equals this. And it will also appear here equals this. Then I run to the treatment is the same like we have done with the vehicles. So I come to the furniture, the accumulated depreciation is here. So I will credit it. So it should be equals to this amount here. And then it will come to the end of the statement of financial position as equals to the original amount here plus what we have added. And we get it there as 11,838. Aya, tunasoga to the next one is buildings. It is 2% straight line. So let me come and bring it here. Buildings. So again, I have initial costs. I have rate of depreciation. And I have current depreciation. So the initial cost here equals, we run to where we have buildings. The cost is this one. So we enter. The rate of discount is 2%. So I put it there. And this value, I make it 1%. Then the current depreciation should be equal to this amount times this equals. So I'm given that amount of 900. So how do I treat it? The same rhythm. So I come here and I talk of buildings. So in the buildings, this is equal to that way. Then I have to show it as my expense, is an expense. This item here. Then it has to come and affect the accumulated depreciation of the buildings by debiting it. Sorry, crediting. We have to credit. So the accumulated depreciation for the buildings, DOE, should be equal to this amount. And then before I forget that, I need to complete that transaction is equal to this plus this equals. Okay. The next thing that we are told is what? We are told estimated corporation tax is 6,500. Now that estimated corporation tax, it has not been mentioned anywhere. It has not been mentioned anywhere in the items that we were given, but we know that tax is an expense. Tax is an expense that we are supposed to pay for the current year. And because we are told it is what? What are they saying? Estimated. So it means they have not yet paid. It means they have not yet paid. So we will come here and talk of corporation tax expense. And because it is an expense, there is what will go to income statement. Income statement. And then corporation tax to statement of financial position. Statement of financial position. So I go to my adjustments. The one that is an expense, we debit it, 6,500. Then the one that is going to be a current liability, we credit. So I will say is equals to this, you copy there. And we can complete that transaction by coming to charge it here on the debit of the income statement. So here should be equal to this, we debit it there. And then this one, we come and credit it. We come and credit it in what? In our statement of financial position here, equals. Yeah, so we put it there. Put it there. Now, when we do that, let's go back. We are through now. We are through now with the additional information. We are through with the additional information. When you are through with the additional information, what you need to do now is to go back and analyze item by item to see whether you have recorded them the way they should be recorded in a full way. Those items that will go to the income statement, you take them there. Those will go to the statement of financial position, you take them there. So one by one, let's look at ordinary share capital. So ordinary share capital, in our draft trial balance, we had 60,000. Then in our additional information, we said we are going to adjust by 5,000. So this one should close. This one should close to the statement of financial position, and we say it should be equal to the amount that we began with. You add what we adjusted. Yeah, that way. You add what we adjusted. So that is about the ordinary share capital. Let's come to the second one. We go one by one and be careful so that we don't miss. Then for the share capital, they have not been adjusted. So this one straight come here. They have not been adjusted, so that amount inafunga hapo. So we need to go marking so that we don't miss any. Then we are now in revaluation reserve. So revaluation reserve, we had 12,000. In our adjustments, we have recommended 4. So it should come here as equal to this 12 plus this 4. That way. That is the revaluation reserve. That is done. The next thing is which one? retained earnings. Sorry, I need to go back to my retained earnings. So my retained earnings, the opening balance, it has not been adjusted. So it should come here straight as a credit balance. This one should come there. It has not been affected. Higher. Then the next item is inventory. So inventory appears in our income statement. Ukikumbuka how we prepare, it appears as a debit balance. So I will come here to the income statement and I say this is equals to this opening inventory. I enter it there. So we are done with that. Then the next item is the trade receivables. So trade receivables, those are assets, they are current assets. So they will come to the debit of our statement of financial position. So I'll say is equals to this. It has not been adjusted, so it gets in there. Ikiwa namna hiyo. Then the next item after that is cash at bank. It has not also been affected. That is also a current asset to appear here. So you bring it that way. The next item is trade payables. Now trade payables, those are liabilities. And for the trade payables, the amount is 10,860. It has not been affected. So this one should come here to the credit side. We'll say equals that amount. It has not been affected. The next one is loan stock. It was not affected, which is also a liability. So this 8,000 should get in there. The next item is sales. So sales should appear on the credit side of our income statement, and they were not adjusted. So we'll say equals this amount. We put there. The next amount is this amount is for the purchases, but these purchases here, we had recommended these 1,000, but you remember this 1,000 was only entered once because it is already included in these 2,500 here. So it's not going to affect our purchases. It's not going to affect our purchases there. So we come here and say this one should be equal to, now we are coming here. So we already have recorded the sales. So we now record the purchases. Should be here that way. The next item is the credit loss. That one was not affected and it's an expense. So we need to debit it there that way. The next item is salaries. Salaries, that one we had already adjusted. That's okay. The next item is insurance. Insurance was not affected, is an expense. So we just bring it here. The next one is postage, is an expense, was not affected. We bring it there. The next one is also an expense, not adjusted. So we bring it the way it was. The next one is loan stock in interest. That one we adjusted. The next one is directors' emoluments. Those are expenses. They were not affected. So we just bring them the way they are as expenses. The next one is dividends paid. Those are expenses. They were not affected. So we just bring them that way. The next one is dividends paid. They were not affected. So we just bring them the way they are. The next one is general expenses. We adjusted. General expenses we adjusted. The next item there is motor vehicle at cost. So this is an asset and that was not affected. So it will come here as a debit balance. So equals to motor vehicles. You're here. Then the next one is the depreciation, accumulated depreciation that we have already adjusted. The next one is who? Is office furniture. That one is a cost, rather is an asset. So we put it here. It was not affected. We put it there. The next one is the depreciation. We already have put it there. We already have adjusted that depreciation. The next item is RAD. So RAD, initially it had 25,000, but we revalued by 4,000. So we need to say that this now will be the original amount plus the revaluation. So that will be our RAD, which is an asset. Then the next one is buildings. So buildings is an asset. They were not affected. So we just bring the 45 there. The next one is the accumulated depreciation, which we have already adjusted. The accumulated depreciation is already adjusted. Kutoka hapo, we have the suspense account. So the suspense account, that one, we closed it, if you remember, by debiting here and crediting the ordinary share capital. The next account is closing inventory. Now, closing inventory is already here as an expense on this side. Is already here as sorry, not as an expense, as a negative, so that it will subtract the sum of opening plus purchases. Then it is also present here in our statement as a current asset. The next item is who? The next item is expected credit loss. We already have shown it as a debit, as an expense. We need to keep on confirming whether that is where it belongs. Yeah, because of these very many rows and columns. So it is there already. Then it is also appearing here as a debit because it is no, it should not appear here as a debit. It should be appearing as a credit. This was a name. These are, I think we confused the column. It should appear as a credit because it is reducing our receivables. So it should appear as a credit. So I should have said equals to this. Yeah, you can see here we had put it as a credit. We confirm, yes. Yeah, so there was a confusion of the column. So that one is already catered for. Tunaendelea tu. The next one is what? Salaries accrued. This one we already have sorted it out. It is appearing. I think there was a confusion again in the column. So this one should not be here. It should be here because it's an accrual. It is an accrual. It's an accrual. That's why we had put it there on the credit of the adjustments. And then we added it here. Yeah, so these columns are confusing at times. So the next one is called who? So the audit fees accrued. So the audit fees accrued, we already have shown them there as an expense. We need to keep on confirming these columns so that we don't make errors of entry. So it is already at the right place there, and it is supposed to appear on the credit because it's an accrual. It's an accrual. So that was the wrong entry. It should have come here this way. Yeah, that way. is an accrual. The same thing happening with this one. So these columns, they confused us. So we put it here under the credit. So this one should not have been there. It should have been here because it's an accrual and it was captured here as an expense, the 400. That's why we put it here initially on the column of the credit. Okay, so we are moving on well. The next one is this 350. This 350 is a prepayment. So if it's a prepayment, we already have put it here as the debit on our adjustments, and then tukakuja hapa tukai credit ndio ikapunguza hapa. Then it is supposed now to go. Oh, this column is really confused. This one is supposed to go to the debit of the statement of financial position as a current asset. That way. Then from there, we have the depreciation, which already we have taken care of. This 4200 is, we need to keep on confirming whether it's the right column. That is the right column of debit in the income statement. Then here, the same, these are the one. Then the 900. Then the 6500. Yeah. And it's also appearing here. Yeah. Good. I think we have captured, we have made all the entries. So what we need to do now is to look for the income. So the retained profit for the year. So the retained profit for the year. And this will be the balancing figure. Remember, these are incomplete records. So it will be the balancing figure. So what I'll need to do is to add, first of all, I come here to my income statements and I add the credit. So I can scroll all this up to there, auto sum. Okay, so I needed to have I needed to have selected from here. Sorry. Hii mouse yangu wewe acha kusubua. Uja tuende safari mpaka tufike hapo. Auto sum. Good. Haya. So I need so I first of all need to see the total here. Let me see the total so that isikuwe ni loss to make. So I come all the way here. So you can see now this one is lower. So I have made a profit. So it's supposed to be here. So how will I go about it? So I can undo this. Then I come here and I say, this should be equal to this amount here minus the sum of my cells from here. So I come all the way close the brackets, enter. Yes. Then this one now should be equal to, I can sum. I can now sum again, or I can just copy this one. But the best thing is to show that we have summed so that we confirm that they agree. So I start from here, all the way up to here, out to sum. This is the total. And these values that are in this line here, these values that are here, I'll need to come and double underline. So top, double bottom, that way. And I can also put them in bold. Put those figures in bold that way. So with that, I need to bring my profit on this side. This should be equal to this one here. So with that, I can come and now sum these values. Right from here, I go down all the way up to here. My mouse letting me down. Alternatively, I can say equals to the sum. So I select from here all this up to there. I close the brackets and enter. Then I come here, do the same, equals sum. Double click. So I come and start from here. All the way to this point, close the brackets, enter. Yeah, so you can see the figures are balancing. We also needed to show the totals of the trial balance. The totals of the trial balance, this one, should be equal to sum. So I come here, I pick from here all the way down here. Oh, sorry, I picked wrongly. Supposed to come and pick. Hey, my mouse is releasing before it is time to release. Hey. So close the brackets, enter. Okay, then I do the same thing here. equals sum. So I come here, pick from here these cells, nakibia nayo up to where? Up to where I have the retained profits. Close the brackets, enter. Yeah, so you can see they have balanced. So that is how you're supposed to prepare that draft and earn your 20 marks. So on your own now, you can attempt the question of December 2024. Sorry, not December 2024, 2023, December 2023, question number 24. Question number 24 is the same as this one. The only difference is that in that question, they had required the candidate to have two trial balances, the opening and the closing, but the concept is the same. So if you have understood this, and now you bring it together with you merge it with your knowledge in accounting, then you are able to do that. So please do that. If I get time, we'll do it together. If I don't get time, then you can apply this knowledge and handle that. There was also another question, I think, for April 2023, also question number 24. It is exactly this way. Thank you very much. See you in our next lesson.